look at Rig. So what I wanted to talk about with Rig, this is another name that, okay, now at some point, this is the same trade. Okay, so understand that we're looking at we're looking at uh we're looking at this very similar move. All right. Outside the Bollinger, very extended RSI. And what we get is this divergence on this move here. Now, it's not a new high, 1616 by, it's not a new high, right? But it's high volume, it's declining volume, it's declining volume. Now, bulls would say here's a pennant and it's about to break out. And that's okay. I'm not bullish on oil. I also know that this stock is rallied quite a bit. And there's two ways to think about this. If I go to the weekly, all right, you can see that at the end of the day, on the weekly, we are up in this range. Okay. Now, we've broken, at the end of the day, this downtrend is here. We've broken certainly out of this near-term sort of downtrend, right? And this obviously support in here and this nice breakout in here. And there's no round figures to speak of. There's just levels. And at the end of the day, it's just a cluster. There's a cluster of past sort of resistance or, you know, what was trying to be support, breaks down, comes back, breaks out. So there is a case to be made. But the real thing for me is this was a valuation issue. What I wanted to show you was that in the energy space, what's happened is, this is a chart that was on the main thread as well. But in the energy space, what we have is this massive valuation divergence between different players in the space. And so if you look at the drillers, these are the traditional drillers. Some are offshore, some are international, like a rig. But what you find is when you go against the stocks like in the Permian or in shale, anything in shale, what you find is here's the crash. Let me separate these by security so we can look. I'm going to compare Rig and Fang, which is Diamondback. Everyone loves Diamondback. Here's the crash during oil price crash into 2015 and the low at 2016. Well, the low in the drillers came in 2015. The low in the shale producers, the low in the shale producers came in 2015. Fang is on the bottom. And the low in the drillers came in 2016. But the shale producers have massively jumped in valuation back to higher levels than they were even when oil was $100. Okay? And the drillers offshore have only come back, you know, part of the way. Now, if you think about valuation, again, this is only one metric, but the point is that valuation-wise, these are extended relative to their two-year history. Historically, they go much higher, except on the shales, they're way, way out of whack. So a lot of people would say, why not go after these? And we've talked about it. I can show you the chart on Fang. You know, it's not something that I'm afraid to go after. It's just very challenging. If you look at Fang, I want to show you, look how far it's run. It's at new highs even relative to the $100 price in oil back in 2013, 2014. And this can fail, and I've been trying to do it, but don't underestimate these. They have 30, 40% short interest. HP is another one in that space. Look how far they've run. I think these are all over, and I want to do a video on them. I think this is all resistance, but at the end of the day, I'm trying to find an easy, quick trade. And one of the thoughts is when I look at Rig, I look at some of the drillers, I'm thinking a little differently about the valuation stuff now, which is if you look at like an EOG, same. Look at all of that. Now that you go to Rig, not bounced as far. You know, you go to Diamond, offshore, nothing. You know, so when you look at some of these names and you know, some of the Canadian stuff, all this stuff has bounced tremendously. Trinity, I think that's rallied decently. And, you know, these are all in the shale. Most of these are. So when you look at that, you think, okay, you know, certainly some would say, well, there's catch-up here. I think quite differently. I think that I think this is insane, and it's a short squeeze. Let's add float. You know, now it's come down to 6.8 per 2%, but it was as high. Look how high it was at one point. It was like 30%. And the short interest here on these stocks were as high as 39% on Rig, and now they're down to 18%. So this is what that move is. I'll show you with HP is probably the most prominent, I believe. Take Fang off. Yeah. So you look at an HP, I mean, you're talking about 36% short, and it's only come down 10 points from the high. It's been rising all the way through, and that's the fuel for these stocks to keep rallying. So I'm not of the mind that, hey, there's some big fundamental divergence, you should buy up all the cheap energy stocks. I think, looking at RIG, let's go back to it on the weekly, I like that bounce into 16. I look at the chart here on the daily. I like this divergence. It's a very, it's all defined. I probably, if it puts in some strong days, or obviously if it jumps up and stops me out, that's one thing. But I'm trading against this candle right here, this bounce out of the Bollinger. I see that down day, and these can move pretty fast, and so it's all just a quick trade. And like I said, I showed sort of the volumes and those things. And then let's move on to the long side. So I'll leave it at that.